In today's video, I am going to be breaking down my favorite ETFs for the month of October in 2021. Let's get down, let's check these out. I think that some of these could be fantastic buys right now. So we're going to start with some American ETFs and then we're going to finish this video with Canadian ETFs. So first off, XYLG looks absolutely fantastic and interesting right now. It's a S&P 500 cover call, what gives you a growth option, which is absolutely fantastic. Now, when it comes to the yield, it shows NA on Yahoo, but it's actually 4.5%. From there, the volume isn't exactly massive, but as long as you're not purchasing, let's say, anywhere between 1,000 and 5,000 shares in a day, you should be pretty well okay. The expense ratio is 0.6, so it is a bit higher than most ETFs, but it's because it's a covered call. Generally speaking, covered call ETFs do have a higher premium when it comes to the MER. And so far, year to date, it's up 14.75%, which is actually pretty darn strong. Now, the reason why I'm saying that this is an absolutely fantastic buy right now is right there. It's had a little bit of a pullback, and we've seen this also earlier on as well. Now, this is not a 5-year chart. This is only about a year and a half because it's only been around for roughly a year and a half. And what we can see is that there's a pretty strong line going towards the upside. We've seen a dip here, and we're also seeing a dip there. So what I'm saying is with this dip, it could be a good time to potentially start slowly getting into this ETF. It does pay a dividend every single month, and it's pretty well set at about 11 to 12 cents per share. We've seen, of course, a couple of months here and there that are a bit lower, but also a bit higher. So overall, about 11 or 12 cents per share every single month is pretty darn strong. Plus, you're getting that growth. Now, its top holdings are, of course, the top holdings pretty well when it comes to the S&P 500. Apple is obviously on top. It's the biggest company in the world, and Tesla is on there as well. Overall, in my opinion, an absolutely fantastic top 10 list. I really do like this ETF. The next ETF is going to be the ARK Next Generation Internet ETF, ARKW, ARKW. Now, there's a reason behind me picking this ETF. Obviously, the volume is through the roof, 700,000 shares traded per day, so it's going to be easy to get in and out of. You're not getting a dividend, however, but you are getting potential huge growth. You are paying a very expensive MER of 0.79%. But there is a very good reason as to why I'm picking this, and that is right here. So we've seen a little bit of a pullback recently and a little bit of stabilization. However, check this out. This is pretty slight, but we are seeing an upside down head and shoulders, or at least that's what I'm personally seeing myself. It would be a lot better if that wasn't there. However, we can kind of see it right here. And to me, that is substantial because now we haven't seen any massive loss at that point in time after the head and shoulders. This could actually show that there could be a little bit of a run coming up. Obviously, do your own research. Don't just trust random people on the internet, but also make sure to kind of read the charts yourself and see what you see in the charts too. Now, however, it does pay a dividend every once in a while, usually in December, but not all the time. It never paid it in 2019, and it did pay a nice massive one in 2018. Now, its top 10 holdings actually equal about 49% of its total assets, which is huge. We're starting to see Tesla make a run to the positive, and that's a little bit of the reason why this ETF is, of course, starting to move up positively, but there's a few different reasons. This is called Next Generation Internet. So these are the 3 companies I think are going to be huge coming over the next 5 to 10 years. This is not a day trade video. This is a video on ETFs that you can hold for a very long time. And these three stocks are some of my favorite right now. You're getting Bitcoin, and Bitcoin isn't going anywhere, and it's basically on sale right now. Shopify is massive for the future, and same as Coinbase when it comes to Grayscale Bitcoin. When it comes to these NFTs and as well as these different cryptocurrencies, we're going to be seeing huge pluses when it comes to those over the next 5 to 10 years. Square I've read stories that they're starting to try and get into that cryptocurrency stuff as well. And of course, Shopify is huge when it comes to building websites for businesses to be able to do e-commerce. And Tesla is Tesla. They're not just a car company, in my opinion. Now, another ETF that is fantastic, which is a Canadian ETF, which is XEQT. It's an iShares Core Equity ETF portfolio. It's currently up 14% this year, and the historical NAV is actually pretty strong. So it's had a little bit of a pullback recently. We've seen this multiple times in its history over the past year, and it really does look like a very promising ETF to purchase. When it comes to the yield, the dividend, it's only 1%, so it's not going to be a huge dividend. It does offer DRIP, and it does pay quarterly as well. Last distribution was 7 cents per share, again, not massive. So what are the fees? The fees are 0.2%. Risk is apparently low, and that's also my opinion as well. Now, what does it invest in? So its top 10 holdings are actually only 6. You are getting Canadian and US cash, which is not a big portion. But what you are getting is basically an S&P 500 ETF, which is weighted at 48%. You're getting XIC, which is the capped composite TSX ETF, which is at about 24%. So you're getting US and Canadian stocks. You are also getting the MSCI index as well, which is fantastic at 22%. And you're getting what I am kind of leery but interested in myself, which is the emerging markets. But it is only worth about 4.5%, so it's not massive. So why am I interested in emerging markets? Well, we've seen markets really pull back because of what's happening in China right now. Now, it seems like that Evergrande business, that company, seems to be at least stable for at least a little while now. They just sold one of their businesses, I think it was a bank, off for $1.5 billion or somewhere along those lines, which will at least keep them afloat for a little while. And it may just teach them not to take so much darn loans. Oh my God, they have a lot of loans. But either way, it's pretty well stabilized over there, and it seems like there could be some growth there this month because they've had such a drastic pullback because of Evergrande. And the last ETF I'm going to be breaking down, I think is going to do pretty good in October, is the Dow Jones. We have to remember that October, November, and December are some of the strongest months historically for the Dow. And what we are getting here is an ETF that is hedged to the Canadian dollar. It is the Dow Jones Industrial Average ETF, and it's a covered call, which means that we will get really good dividends. It pays 4.5% as of right now, but its management fee is a bit high at 0.72%. It does pay monthly like many other covered calls, but its market volume is quite low. So if you're looking to buy 5, 6, or 7,000 shares at a time, it's not going to be very easy to get in or out of. But if you're looking to buy maybe 500 shares at a time, it should be pretty easy. 500 or less shares, you should be able to get in and out very easily. When it comes to the distribution, it is 10 cents every month. So that's the one issue with many covered calls when it comes to BMO. But they do sometimes raise the dividend, or the distribution, I should say, when it comes to the covered calls every once in a while. But if you're looking for dividend growth, I would be more leaning towards a bank or an ETF that covers the whole entire market or something along those lines. Its top 10 holdings are all very strong. We're seeing Visa and Microsoft being in the top 10. I'm not a fan of McDonald's, but they are also a very large and very strong company. Home Depot and also Goldman Sachs, which is a bank, and I just really like banks myself. I guess as an investment, I'm kind of addicted to them. But those are my picks for the month of October. Do you agree or disagree? Let me know in the description below. If you have any suggestions, obviously leave them down there as well. Anyways, hit that like button and subscribe, and I'll see you guys in my next video.